My name's Sid Mendelson. On my right is Bob Holden, and on his right is Mike Parker. On my left is Frank Morrison, and on his left is Dennis Gertz. Let's continue, gentlemen.
Okay, we'll continue where we left off on the last session on books and records, and look specifically at the slide of a security ledger, and try to identify a couple of the items that we could pick up. Specifically, you have the trade date, the certificate number, whether you bought or sold. This is for the specific security Vulcan Electric Systems. Number of shares, cost, total price, and whether it was a principal or agent transaction. It's an agent, the name of the broker, and you'll notice that W.E. Churn is, or We Churn is one of the brokers, and the Houghton Company is another. The amount of commission.
An upfront firm.
That's right.
Yeah.
Fully disclosed.
You should mention that the certificate numbers, by and large, you won't see those on the fund's record since they're maintained by the custodian. The fund would
really, you don't see too much churning. They're, it's not really meant to show that. They're in an accumulation period. They're buying, and they sell a little bit. Buy a little bit when it drops.
One thing I noticed, Dennis, looking at them, you see they're largely all principal trades, but then you see some agency trades interspersed. That raises questions in my mind as to why there were suddenly went to an agent.
Normally, the principal would be the market maker.
That's
yeah.
That's
so
correct.
Suddenly they went to an agent. Now, what would you do, Mike, if you saw that? Here, this is probably an over-the-counter security. Is that right? With all those principal trades.
I'd go to the pink sheets for those days. Is what I'd do. Pink sheets listing activities by market maker, and see how the trades indicated stack up against what the market maker was offering on that day.
Well, would you find out who the broker? You find out who the broker is.
And you could send out what they call blue sheets out to the brokers involved and find out who they got them from if you wanted to go to that.
Yeah, there's one other approach you could do is to review the confirmations covering the principal transactions to determine what broker they dealt with on a principal basis. Okay, then you know who they dealt with on an agency basis. Right. Then you might want to go to that broker to find out who he dealt with.
In other words, what you're trying to
make a determination as to whether or not the one broker was interpositioned between the fund and the primary market maker in the security.
That possibility certainly seems.
There's always another possibility. Just in the spirit of brevity, you could have a capital depreciation fund.
But in any event, I think the thing to take.
This record, according to separate ledger account for each portfolio of securities, you're very seldom. I was sitting here looking. I've never seen one like that, because they don't give commission. They don't know who. They don't give who they do business with. The only thing it really does is that the ledger account shows what they bought, when they bought it, and how much they paid for it, or how much they received. If you want to find out who they bought it from and what commission, you have to look at another record. That would be nice if you ever saw it like that, but you're not. So
this is purely for illustration purposes.
Yeah, so. But I know. But the examiners have to live in a real world, and if any of them that are new, don't ever expect to see this, because
what would you
it's
see?
Going to be
what would
on
you
a ledger. All you're going to see is they're going to show the security, what they bought, when they bought it, and how much they paid for it.
Net or with commission.
It won't tell you. It won't tell you.
Then what would you do in order to get that information?
If you saw rounded dollars, that would give you an indication that it was a principal transaction, because usually with a commission it would be some odd cents involved. But other than that, there's no way to tell. You would have to go to another record in order to get that information. The broker's ledger, confirmations, the first record we spoke about, the journal. That type of thing.
Let me ask you this, gentlemen. When you're dealing with the stock ledgers or security ledgers here, would you examine every ledger that the company had, or would you or would you take a sampling? Just how would you go about it, assuming you haven't found anything wrong thus far in the inspection? How thorough would you examine these security ledgers, individual security ledgers?
I personally favor taking a sampling based on not some people talk about a random sampling, that type of thing. I just, what I'd do is if I would take that ledger, the securities ledger, and I'd go through and the ones that looked like there was a certain amount of activity, I'd stop and look at those. Ones that had just a purchase in it, I'd probably just keep right on going. I'm looking for activity. I'm looking for something that they may be the possibility of churning, or well, you don't use the word churning with respect to investment companies, but a lot of activity and that type of thing.
I think another thing that you would look for is to make a determination as to whether or not they've invested a larger amount of dollars in a particular security than their policy permits them to do.
Right.
Now, if you were flipping through those ledgers and you saw ABA Securities Company as a security, a Section 12 would click in your mind, would it not?
Right.
Or you saw, as we did in American General, saw IDS. It would click. The IDS is a broker-dealer investment advisor. And what other one did they have in IDS?
There's another one
Went into it. It was in bankruptcy by the time we got to it. CIC, which owned Chase Funds, the Chase Management Company, and owned the Waddell and Reed in Kansas City. United Fund, the manager of United Fund. So here was a company much more than 15% of its income was derived from investment advice or broker dealer.
Well, what I do when I look at them is to go through on a fast scan first and look at just the companies. You're only talking about maybe 80 or 90 pages, so you're not talking about a large amount of time. I think it's worth spending the time because the investment activities of an investment company are essentially the guts of the operation. That's where the money's going. When you're looking at some of these other areas, you're talking about costing investors small amounts of money, whereas they can lose thousands through the fund's investment operations side. I don't think you should spend too little time in this area.
As Sid was pointing out way early in the program, it's hard to steal cash from a mutual fund. If there's any real fraud going on, it's going to be through the securities ledger.
And if they do steal it, the shareholders will get it back once you catch them because of the fact that they're protected by a fidelity bond. Whereas if you have a portfolio manager that's going off and going into the gray areas of the fund's investment possibilities, they'll have a much harder time getting that money back if they can get it back at all.
As a matter of fact, in the 12D3, in your American General, how much did the company pay back? Can you remember?
Altogether, I think we ended up with $3.5 million.
$3.5 million, which was a partial. The fund obtained that as partial damages for the securities, the illegal securities that were purchased for the fund. These two units that I mentioned, IDS and CIC. The loss came that with other violations came to approximately $2 million.
We also had the 5% violations, which Frank mentioned earlier. And in this situation, I took part in the exam, and I don't feel it was anything willful. It was just that there was no one there taking a look at these books and records. They were looking at the books and records on a day-to-day working basis. They were making entries, but
this
no
was
one.
American General itself.
This is American General.
Well,
but no one was standing back and looking at what they were buying. And
well, we took the position that the internal controls were completely, there were no internal controls, and somebody could have walked away with the building if they were strong enough.
Let's look at the.
There was another situation that has to do with this 5% that where a fund has a limitation that Frank mentioned. That if the first place you look is at the we normally look would be at the pricing sheet, and just to take a fast look with a 5% of the assets and see if you find somebody that it looks like they have something that's more than 5%. But even if you find the 5%, that doesn't necessarily mean that there's a violation of that, because then you're required to go back to the security ledger because it's at the time of purchase.
Right.
See? So it may be more than 5% now, but it may not have been more than 5% at the time of purchase. So you have to be very careful that you have to take each transaction and go back and see at the time that it was purchased and did it represent more than 5% of the assets at that time.
Mm-hmm.
And that was a situation, we had the same kind of thing in the Rittenhouse Fund case up in Philadelphia where they and that was very interesting because what they were doing, this is just a question of greed, because they had two broker-dealers involved who were affiliated with the funds, and I forget what the New York outfit was, but what they were doing was, I sell you my dogs and you sell me your dogs. See? They couldn't sell what they did indirectly, what they couldn't do directly, and maybe because it was really very subtle the way they were doing it, except they got greedy and they sold more than 5% in one particular issue. See? And of course, once they did that, they overstepped the bounds, and so that, and there were other problems involved with the fund also, and they didn't have any internal controls either. But they were really like in your case, you don't think that they were trying, and we know that they were trying to do exactly what they were doing.
Well, why don't we talk for a few minutes about the situation of finding the suspect transaction, where he says, you buy my dogs and I'll buy yours. As to how you would find, as to ways you would find a suspicious transaction. One thought that I would have is that when you go through, look at the portfolio, individual securities, and look for securities that stand out, that aren't of the same quality as others.
Names you don't recognize at all.
Names you don't recognize when they're otherwise dealing with well-known companies.
Remember yesterday I told you about when we were talking about defalcation, about the bonding, and I mentioned that the person who was rolling over notes, and they came across the name Broad Brothers and Clark.
Oh, that's Revere.
A Revere fund, and the question came up: who was Broad Brothers and Clark? And the person that was actually doing the stealing said that they were a subsidiary of Federated Department Stores, and the young man, it was his first inspection. He came back and actually looked them up in Standard & Poor's, and he couldn't find any Broad Brothers and Clark, and that tipped him off. And he kept pursuing it until we found out that it was a fictitious company.
The auditors bought that.
Yeah, they fooled the auditors.
Yeah.
That's what the exam really consists. A good exam consists of. You go out and you root around. You follow a lot of trails. The great majority of time, they're going to lead you nowhere. But that's what you have to do. Just ask questions.
As you're rooting around, keep in mind what we said early on, that we're not looking to make a federal case out of every little thing either. But I think you have to keep a very open mind and be satisfied personally on these kinds of things, because it's the ability to pick up on a small thing and keep after it that will tip you off.
With the procedures that we've established, if the examiners will go through every procedure and will go and check every area that's in the outline, I wouldn't want to say that there wouldn't be some isolated instance that somebody couldn't get away with, because I just don't think we can hit every area and
that airtight.
You just can't do it. But if there's a course of conduct going on, I have absolutely no doubt that we'll find it. I just cannot believe it, because there's no area of an investment company or investment advisor, for that matter, that we don't touch.
I think it's a good idea for any inspector, particularly new inspectors, just to look at the outline, the inspection outline, just to look at it before he goes out. It gives him an excellent idea of what he's going to do when he gets out there. That, coupled with the inspection manual, will help him considerably when he actually goes into a company. He knows what, at least he's not in the dark. And I happen to agree that this outline really is a condensation of the experience of a great many inspectors that went before. And I would say that we have it down very well at this particular moment, both in the investment company area as well as the investment advisor area. Gentlemen, can I, because of the lack of time, could I move to one area that I'd like to have you discuss, and that is correspondence files and things of that sort. Can you, would you like to talk about that, Bob?
Bob, why don't you give us your experience and what the problem may be? I don't look to you for an answer, but
there's a certain, some people say a certain ambiguity in our inspection, and I understand it's going to be the subject of another panel of our inspection authority. But as a normal course of our examination procedures, we ask to see correspondence, and invariably they'll say, "Oh yes, here's the shareholder correspondence over here," and they say, "Oh, that's very nice," and we'll look at that. Now I say, "Now I want to see your correspondence," and it's at that point where we have begun to, in some instances, to run in trouble. I'd have to preface it with saying that the times that we've had the difficulty have been the time where there have been in-house counsel. When there hasn't been in-house counsel, we generally haven't had any problems with it. But that's all right. Also, in every instance where we've had problems with it, we've had a case. Now, I don't know if there's any direct relationship, but we had, for instance, we had a situation with T. Rowe Price and Associates, and their general counsel. We generally saw everyone's correspondence. When we wanted to see the correspondence files in the legal department, they refused us access because they said they were privileged information. And in another instance, we've had refusal to the files by Stedman and Company, who was already barred, and their counsel refused us entry. I don't know that I can really blame him, though. I mean, we had already done the damage, and that's on appeal now. But in every instance where we've had the problem, I just they do it on the basis that we're supposed to only have access to financial information. Well, if there's anything wrong with their financials, if there's something wrong in terms of self-dealing, if there's a violation of law, that does affect their financials.
Yeah, well, don't we have the power to force them to keep books and records, and to the extent that we can compel them to keep certain books and records, we can inspect those records. Doesn't the question come up here that we can only enforce books and records that impact on the financial statements?
Well,
isn't that true?
That's the argument.
Well, I mean, I think that the statute says that, or certainly. Now, our argument is that correspondence. You can't keep correspondence unless you have. I mean, you can't make them make a file unless they have correspondence. In other words, you can enforce the fact that they have to keep the correspondence. And it seems to me, and I have so argued, that correspondence, whether it's customer complaints or whether it's complaints with respect to a 17, or whether it's correspondence setting up a joint transaction with somebody, or correspondence in which the investment advisor is going to get some compensation, it impacts on the financial statements, either because there may be a contingent liability that the fund has incurred, or two, there may be it may impact on the fact that the fund will have a claim against the investment advisor or somebody in the complex, and thereby that may well impact the financial statements. So we have taken the position here that we have a right to make them maintain a correspondence file, and we have a right to inspect it. What you gentlemen are coming up with is a specialized objection that the particular file, in your case the T. Rowe Price file of the internal general counsel, was that it was a privilege, that this was privileged on the attorney-client privilege. And we took the position there, I think, Bob, that they could maintain the privilege. That was fine. Their merely asserting the privilege didn't give them the privilege. In other words, the documents therein had to be documents which were subject to the privilege. And as I recall, we took the position that they had to give us an inventory, and they did.
Yes.
Now, as a result of that inventory, did we demand any documents there, in your recollection?
Well, I think all at that same time, the case itself was developing out of it, and I think it kind of all, one way or another, we got the information that we wanted, whether it was from that department or from some other department. Really, what it was, I still to this day don't really understand why that they did what they did, because they really almost had, they had such a duplication of records in that operation that. I really can't believe that we didn't see, everything that they wanted to, that we wanted to see.
Well,
they opened up everything else that they had.
The General Counsel's office said it is right now looking at this specific point, the right of privilege of the
yes, I know.
attorney.
Yeah. My advice to inspectors when they are refused records is to be extremely courteous, to get the reasons why particular records are being refused. I would suggest that you request the registrant or the people in which you are conducting the inspection with, though that is the House Counsel or the person who is refusing, to state in writing, if possible, why the particular records are being refused. If you get it in writing, when you go back to your office, you know what the objection is, and because it's articulated in the words of that person asserting the objection. I don't think one should start demanding, threatening, or anything of that sort when he's refused documents. I think that if he's away from his home office, he might want to call up immediately and get advice from the administrator or from somebody in charge of inspections, just how to conduct themselves. And because it may well be that the records are properly being refused, or it may well be that you're about to hit pay dirt, and they don't want you to see those records. I think that under no circumstances should you give them an excuse to attack you at a later date by saying that you were either discourteous or that you threatened them or anything of that sort. And if the privilege of self-incrimination, not self-incrimination, but attorney-client privilege is asserted. My suggestion would be to ask them for an inventory of each document, what it is, and the date of the document, and give you that. And from that, your legal counsel in the regional office or in the division will be in a position to determine at least primarily or without any further investigation whether or not they have where the privilege is available.
Sid, as a practical matter, isn't it true that most examiners are going to immediately withdraw to a safe phone and call their branch chief?
Well,
and say, help.
One thing that may be of help, and it's in a couple of instances it alleviated the problem. If you have someone in the staff that in a larger operation, you deal with the people on the line that are doing it. And if somewhere along the line, and if you get that, let's say for instance the House Counsel, and he's really doing part of his job, and it's his job to protect his client, and I don't really have any problem with that. But at that point, if he says no, then what you just have to be very careful, for the examiners, be very careful in doing this. What Sid says about doing everything in a very orderly and courteous manner, I think is very important, because it's a very delicate item. But just ask who his superior is, and have him check. Either have him do it, or suggest that maybe it would be advantageous to talk to that person to see if that really is the position of the firm, because we've had at least 2 instances where that happened, and we went and spoke to the president of the company, and he said, fine, no problem. And he says, whose would you like to see? And I'd say, I want to see yours. Because I figure if I can see the president's, I can see anybody's. So,
Don't you see the president when you walk in the door to begin with, just to set up?
So, you ask for him, he's not always there, and, at least you've given him the opportunity, and if he doesn't want to do it, then he can, I don't really, he can put whoever he wants to be as representative, just as long as he knows that we're there or he's been informed. If he chooses not to do it, that's his business.
Now, with respect to the privilege, as I said, once it's asserted, I think that other than what Bob has said,
at T. Rowe Price, they went to their superior and they went along with him and asserted the privilege. They wouldn't.
Well, you see, there we were dealing with an investment advisor, as I recall. Mm-hmm. If we're dealing with an investment company, and they're the records of the investment company, these employees of the investment advisor legally cannot assert the privilege. The privilege, as I understand it, should be asserted by the investment company itself. It's their records, and it's the client's privilege to assert. So at a later date, back in the office, you can determine if you really want to see those records, whether or not the board of directors wishes to assert the privilege, because that's where it would come from. Let's go on to something else.
Okay, very briefly, let's finish up on some of the mechanical things, some of the mechanical records that are required. We won't go into any detail into any of these organizational records. These are the corporate charters, the certificates of incorporation, the bylaws. These are always on hand, and apparently looked at, see what the restrictions were set down. They may not.
I think the minutes are in.
Yeah, and then finally, we look at those. Things may have gotten buried over the years. There may be a restriction in those bylaws that is not reflected any longer in the operations of the company. And then, most importantly, the minutes of all the kinds of meetings that go on within a mutual fund. The shareholders' meetings, most importantly, the directors' minutes, trustee and directors' committee meetings, advisory boards, and things like that. There's some real guts here that need to be looked at now.
Why would you look at the director? Why would you look at the minutes of the meetings, gentlemen?
For a lot of reasons. The first And probably the most important reason is to determine whether or not the requirements of Section 15 are being complied with. Just briefly, Section 15 requires approval of the advisory agreement by a majority of the disinterested directors on a yearly basis after the initial approval.
You look for completeness of their thought process and the kinds of things
Most
they
definitely,
considered.
and most important, the attendance and the ratio of attendance to determine whether they have the appropriate or requisite number of disinterested persons casting their votes in person. The statute requires now that it be done in person, and that's a very, very important aspect of your compliance program.
Not on the telephone. I guess a lot.
Not on the telephone.
Normal
The
board
statute-
meetings could be conducted on the telephone, just having a conference call among all the directors,
Right.
but the approval of the accountants and the various agreements, the advisory and I guess the underwriting agreement, have to be done
In person.
in person.
The bond has to be approved on an annual basis.
Right.
Yeah.
There's a lot of housekeeping requirements that the directors are charged with the responsibility for. Just to give you an idea of the kinds of consequences that can flow from the non-approval of advisory agreements, we had one instance very recently up in the New York office where failure by the independent or not disinterested directors to approve properly the continuance of an advisory agreement resulted in the recovery of over $500,000 in advisory fees paid under that agreement from the time of improper approval to the time that we went in and conducted our examination. So that's one of the things that can flow from it.
Do you take attendance of directors' meetings?
Oh, most definitely. Most definitely.
And you do that. Why do you do that, Frank?
We want to determine whether or not particularly in the case of the disinterested directors, whether they're fulfilling their fiduciary obligations to the investment company. If they're not attending meetings, I guess you can presume that they're not taking an active interest in the affairs of the investment company, and therefore one can conclude that perhaps they should be replaced. Just by way of a guideline, it would seem to me that if a disinterested director failed to attend at least 50 or 60% of the meetings held during a particular year, he has not been fulfilling properly his fiduciary obligations to the particular investment company.
And doesn't in the corporate governance rules under the 34 Act, isn't it 75% where you must disclose now that a director has not if he doesn't attend 75% of the meetings? Isn't there something of that sort? At any rate,
Minimally.
Do you do the same
Oh,
thing?
absolutely. Yeah, absolutely. You know, minutes, by and large, are usually very cut and dry, and they just don't give you a whole lot of meat. Discussion held, and but every once in a while, they really do have something in them, and they're very worthwhile. The effort to review them.
Isn't it true if they know they have a problem, generally the minutes get to be longer because they want to document that they considered it?
Quite frequently, we had that situation where the company thought it was really covered itself by very long, but they had problems in other areas, and all it did was tip us off.
Yeah.
Red flags all over the place.
Right. Very often it's not what the minutes contain, but what they don't contain is where the problems lie.
You are looking to see that they approved all these contracts, and if they didn't approve it, the minutes will be silent. But you have to look for that approval.
Quite frequently, you also find where an investment company will have committees, and there won't be any minutes for those meetings, and they're required to maintain minutes. So you would, inform them that they should do that. And
I would also ask for, in terms of the directors' meetings, ask for any materials that have been furnished to the directors.
Gentlemen, throughout this course, we've been talking about net asset value and sale price and redemption price, 22C1. I wonder if we could discuss at this time how the net asset value is determined.
Certainly. While we're waiting for that slide, on the net asset value computation, I want to point out all the records we've been talking about up to now, I think, are required to be maintained permanently. That is, forever. Some of the other ones have various time limits, but all the ledgers and the journals and these organizational records are a permanent requirement.
And they all can be produced on microfilm, except for of course, the organizational records, that sort of thing. But
Sid, can I have that?
basic books and records can be produced on microfilm.
Okay, now we'll have to pan with the camera as we talk about the various areas here to make sure it shows up on the screen. This is a basic worksheet on the calculation of net asset value, and I'm hoping it's based on somewhat of a fact, and it may not appear in this exact context, but you'll see something very similar to this. Now, this is a trial balance. A trial balance is the total of all the debits and credits that you have in your general ledger. It's that simple. This would be it doesn't have a date on it, but day one. This is a snapshot of the mutual fund's financial records. And computing net asset value, everything's right out of the ledger generally, except the current value of the securities. And that's on the last line under assets there. You'll notice portfolio appreciation. The $51,670. That's the difference between the investments at cost, which are the second line item, the $9,175,000. That's what the fund actually paid for the securities, and because of market action, that they've had positive performance, if you will, and there's the difference between market and cost is $51,000. Now, getting to the bottom line first. And very simply, net asset value of a mutual fund is nothing more than the total of its assets at market, very, very important, at market value, at current fair value, subtracting the appropriate liabilities, and that comes up to your net stockholders' equity. In this case, that's $10,230,680 in the far right-hand corner, bottom. This fund has not quite 1 million shares outstanding. It's a very simple division. You divide the 10 million by the 1 million, you get a net asset value of $10.25. Simplistically, it's very simple. On a simple basis, it's not very complicated.
Now, what you've done there is you on your liability side, you've accrued your expenses, haven't you?
Yes.
And now there would be another sheet, the pricing sheet of the valuation sheet of your securities, which would show the plus and minuses of your securities and things of that sort. Is that true?
Right. We're not going to show you that. We have a slide in the past, but it doesn't come across very well. And all that is, and this is very, it happens this way in almost every fund. At 4 o'clock, the guy that's in charge of the pricing will pick up a phone and call the broker that's going to give him the closing quotes on the stocks that the fund is holding. He'll call at 4:15 or whatever after the close of the New York Stock Exchange. And he'll just go down a list. The guy within the fund, and this may be done by a servicing agent, by the way, will know that they own 1,000 shares of General Motors. He'll get the closing price. He'll write down $60 per share. 1,000 shares. He has a current value of $60,000. He'll do that for each and every security that the fund owns. The total of those will be the total value of the portfolio, and the difference between the cost and the value in this particular instance that we just saw was the $51,000, was the difference between cost and value. As a practical matter, before 4 o'clock, the individual in charge of pricing will have taken the trial balance that we just saw and drawn down all the numbers, coming up to a net number with everything except the portfolio. Correct me if I'm wrong. He'll show, in some cases it may be even a negative number. He'll have more liabilities than he has other assets other than the portfolio security. So he'll start out with minus 100,000. you'll price the portfolio to be 10,500,000 or whatever. And he'll plug in the minus 100,000, which encompasses everything other than the securities. Divide that by the number of shares outstanding, and keep in mind for an open-end company that number will change daily, and we'll have to take close coordination between the people handling the shareholder records and the person pricing the fund.
From an examiner's standpoint, what you saw on the slide, you'll almost never see when you go into a fund. They use some high degree of imagination to come up with pricing sheets. You'll come from a very complex, lengthy trial balance that's done by computer for very large complexes, which do a complete trial balance every day to this item where you have this. They plug in one figure to the valuations, which is a synthesis of all the expenses and income and everything else for the day, and arrive at it that way. And from what we have done is take, when you're going to do the examination, take the end of the month, the general ledger, take the trial balance, and do a pricing from that, and compare that to their pricing sheets, unless they happen to use a trial balance, and see how that compares with what their pricing sheet was for that same day, and to see if you come within a penny. That's been the hallmark that the commission's used, is a penny a share. In addition to that, and it's in the outline, is to compare the auditor's pricing that's in the annual report or the semi-annual report, if it happens to be done by the auditor, and the pricing sheet for the same day. We have very frequently found pricing differences just by using that very simple technique. It requires no work other than to get a couple of pieces of paper right.
There always will be, or generally will be, certain inaccuracies.
Well, there's usually accruals or something, but they're explainable, and it has pointed out that there have been very large discrepancies. Again, and this is a way out situation, but I mentioned earlier the Rittenhouse Fund, and they had some fellow that was doing their pricing, and we found this was the first tip off by checking the auditors as of December 31. What the pricing that the auditor used, and I think it was something like 8 cents off. And we finally went back and had the auditors. It was so bad what they were doing. It was so sloppy that we had them go back and I think recheck a whole year. And 85% of the time, the price was wrong. What this fellow had done. So it's just again, normally there's some accrual or something that wasn't put in, but sometimes it really you really hit pay dirt with it.
Gentlemen, you've been talking about the pricing of shares or the value of shares when there's a market for the shares. Have you people, I know you have, come into contact with an investment company that has securities in which there is no readily available quotes? How about you, Frank?
Yeah, we find that on occasion.
And what do you look for at that point?
To see if the directors have ascribed any kind of fair value to it. It's one of the responsibilities that they have under the Act.
Talking about equity securities now?
Well, I'm talking about equity securities. I'm
Start
talking
with there.
about
We've gone through 3 or 4 different kinds here.
Well, there could be all kinds of securities. You could debt securities and equities. I know Bob's office had a very large case with respect to debt securities, principally, and
we have several categories here.
Yeah. Generally, what we run into though is in the area of equity securities, and usually what triggers that is the notation of its saleability. That is the security saleability on the ledger that requires it. What are the procedures of compliance is to determine whether, in fact, the directors have ascribed a fair value to it.
It's very difficult.
And how often do they consider it? And then perhaps go, if we find that there's a serious problem with respect to valuation, look at the information that they use to determine the kind of value that they have ascribed to it.
There's a very large area of gray area in this, and the main thing is to look at the documentation that the fund has with respect to the valuation of restricted securities.
This is especially true in SBICs, where they maybe have large amounts of restricted.
Right. Well, yeah, but it's especially true in any company that has a restricted security. There also could be securities that, for instance, with respect to a security could trading has been suspended, or a tender has been offer has been made. There could be all sorts of unusual circumstances wherein where a market may not readily be available at that particular point temporarily, in which case the board of directors would have to put some valuation on it. That doesn't mean the board of directors has to do it, but it's under their control, and they have to make the determination that as to what the parameters are and that it's being followed through. You just have to look at the documentation and look at that with respect to the general market conditions and
specifically as to market conditions.
Well, you're not looking for specifics. You're looking to see whether it generally makes
right.
good sense.
Right.
Is that right?
Yeah.
I mean, you don't.
Right.
It's not. We're not here to be second guessers.
To say that they put 20
Well, I
on
think
it
you
as
are. I
opposed
think
to
you are
25,
looking. I think you are looking for specifics, particularly in Bob's instance. With I think we're talking about Greater Washington. You're looking.
Yeah.
The portfolio file would have been available, and if it had contained information in it which indicated serious problems regarding this company. So you are coming down.
But in Bob's case, when I say you're not looking for a nickel or dime, in Bob's case, they were carrying the securities at cost when in many instances the issuers had failed to pay, had defaulted on the interest and had defaulted on the principal, and they were still carrying them at cost.
Right.
And so that's not being specific.
Oh.
That's where it's being totally unreasonable.
Yeah. Well, and that's where there's a place where it's gray and there's a place where it's black and white, and that's what we're looking for. And as long as you can determine that the board of directors is doing something, they're going through a procedure, and that procedure appears to be reasonable. And they're arriving, they come down to a bottom line. You can say, well, maybe I'd do it a little higher, I'd do it a little lower, but that's judgment, and we're not there to
But if it is a significant investment, I think you would have to look to the security and attempt to make some effort to determine what its investment history has been.
Let's take a position, Mike. Investment company A you go into, and you look at restricted securities, and they value the restricted securities at $10 a share. And you go over to investment, and you look at it, and you see a board, what the board has done, and the formula the board instructed the investment advisor to use, and they came to a value of that security at $10. And then you go and you say fine, and you leave that office, and you're on another inspection tomorrow, and you find the same securities in another investment company. You look at the board's determination and their formula, which is not exactly the same as the previous fund, and you find that they're valuing that security at 10 1/8.
Well, I wouldn't be concerned about that.
That's right.
But
The answer is they have to take. It has to be, the valuation has to be done in good faith.
But if it was 15 and 10,
if it would, first off,
or if you had a traded security that you had a restricted block of, and you were valuing your restricted security higher than the market. That's a different
matter.
Subject,
but I purposely kept it low. I purposely kept the difference low in order to
assuming it's a matter worth pursuing, that it's a significant investment to the investment company. I would, one step I would take would be to come back to the commission, go to our library, and look up in the periodical guide concerning, where it lists companies, and to see if there's any adverse information concerning the company in the past couple of years. If it's located down in Atlanta, you may want to call the fellas down in Atlanta and say, are you familiar with this company? And they say, oh yeah, that thing's going down the tubes,
Yes.
make some effort. If it's a large investment.
That's all part of the process of seeing what they do.
Do you want to try to wrap this up in 10 minutes?
Go ahead.
Okay.
Yeah.
Let's move away from equity securities to
Just
okay.
from the examiner's standpoint, if you see that type of situation and you have a question, then that's certainly something you want to talk to you want to run it past your supervisor. I mean,
Everything we say.
well, that's true, but you know, certainly, you know, if you think you have a question, you know, then sit down and talk about it and see if you can come up with some kind of consensus. It may or may not be. You know, it seems to me that it's better to err on the side of being conservative and checking things out rather than to say, well, there's nothing there, because you just don't know until you check it out.
We don't have budgets on our inspections, do we, that have to be met? I mean, you have to do something in a certain amount of time or you get penalized for it.
Well, I think that in terms of what the commission's, certainly what the chairman's been saying, that from an examination standpoint, I look to the point of taking much more care about what we're doing, because the reliance is going to be much more on the examination process.
Yes, particularly with the new rules coming out in the investment company area, where you're going to have to make value judgments. It's going to be very difficult, and it's going to be more interesting than it was too.
Because valuation is so important, I think we ought to mention the kinds of problems very quickly, and 2 or 3 different other kinds of instruments. In the money market fund area, I think you will see, well, it depends on how you look at it, more or less of a problem. You're going to see more funds that are valuing at cost. Well, that makes it very easy to value from the examiner's point of view, but you must look very carefully at the prospectus and get a copy of the order, which will generally be in existence, that mutual fund, that money market fund is operating under, and make sure that they're actually complying with all the terms of the prospectus and their method of valuation. Then we get into municipal bonds and corporate bonds. First, corporate bonds. Corporate bonds are not as difficult to value as municipal bonds. In some cases, they're traded on the New York Stock Exchange. The New York Stock Exchange, unfortunately, is not the primary market for corporate bonds, so the value on the New York Stock Exchange may or may not be the primary market. You would have to look, if it's determined by the directors not to be the primary market, you've got to look to a board of directors valuation. But if it's very different from the quoted market, then it raises a flag. Municipal bond funds.
You could have a real problem with that with prospectus disclosure too.
Okay.
There's quite often the prospectus will say they're going to do something.
Well, that I think you have to look to the prospectus to see how they're going to value, and then you have to determine whether they're valuing the way they say they're going to value.
That's the first step.
In all these instances where you have a question of valuation, the easiest check to see if you have a problem, I think, is to look at sales. You look at sales and you see what they're valuing them at that point in time. The proof of the pudding is in the sale. You know, if you find that they were, in every instance, it's overvaluing them at an amount significantly greater than what they sold the thing for, you know you have a problem, or less.
To a lesser extent on a purchase too.
Sure.
That's an excellent test check, I might add, to determine the accuracy of the valuation procedures and their system of pricing.
It's about the only objective.
That's about the only objective way you can determine it. But I can't strongly emphasize enough that the first step when you're dealing with municipal bond funds or corporate bond funds is to look at the procedures outlined in their prospectus. That's the first guideline that you should be looking to, and also the sources. Depending upon who's doing the pricing for them, it might be a pricing service that's doing it, and your examination would necessarily lead to an examination of the pricing service as well, or at least it should, to determine whether their system is consistent with the language that's in the prospectus. And as we said before, the best system, the best test check is to determine the proceeds of the sales and relate that to the valuation at the time of sale.
For both these kinds of instruments, the or the municipal bonds and the corporate bonds, are pricing services that are available to a mutual fund that will handle the pricing of their securities for them. We've had varying degrees of, shall we say, accuracy on the part of these valuation services. In some cases, they claim that they're calling 5 market makers every day on every issue, or they'll test check it, or they're, they know all the trades and all the kinds of securities. So one guy sits down and makes a price every day. To a completely different kind, where all that information will be flowed through a computer, and which will take into account similar securities and whatever, and interest rate changes, and come up with a price. And that'll be test checked against actual trades of that fund and other funds, or actual trades by anybody.
I think that every inspector, in fact everybody that has anything to do with investment companies, should read Accounting Release 118. It is that's the number, isn't it? With respect to valuation of securities, and it gives you there's a discussion of nuances in there that will be very, very helpful when one goes out on an inspection and when one is considering valuation in the division. For example, there's a paragraph or two where it indicates even where there are quotations, the fund may not use those quotations if the people feel that the market is very thin and those quotations don't represent the intrinsic value of the securities, or when they have where they have a reason to believe that something is happening in the market, such as it's being manipulated or something of that sort. Then those quotations, if they have reason to believe that those quotations are fictitious, it's obvious that they shouldn't use them. But and then they are obligated to value. The board of directors is obligated to value as though the securities had no stated market. We have used that part of the of 118 to a very good result in many instances, and I wouldn't hesitate to recommend that as a primer for this aspect of investment company regulation, that one should certainly be familiar with it.
To a great extent, if not 100%, the monkey is on the back of the board of directors, and we have to be very careful that they don't shirk it through boilerplate language or whatever. We've only got a few minutes left. I think we can wrap it up. I'd like to just go through a couple of other requirements. We've skimmed over some in 31, but again, you can use it as a checklist just to make sure everything's in there. One of the requirements is to maintain a record of the brokerage allocation of the fund, who it went to and why it went there. This is important in 2080, whether they're paying up for research or whatever. I don't know that it's going to be very helpful in the amount of disclosure that the fund is going to use. It's always going to be best price and execution, and everything else is secondary.
Research.
What did I say?
Research. Well, that's second.
Yeah.
Research is first.
Oh, is it? Okay.
Well,
but second, they're always going to get best price and execution.
Well, that's always.
That's
They're always
understood.
going to claim they get best price and execution.
If they're using very small brokers all the way across the country, if you don't recognize them, if they're using a lot of principal transactions, you better just red flags. Finally, on microfilming and the current state of the art and the way records are actually being kept, I think it's safe to say that in a few years you'll see funds that are 100% microfilm. There may never be a hard copy unless somebody pushes a button for you. I think the way we just have to go with that. I mean, that's the way it's going to be, but you have to be able to get a readable copy, and it has to be readily available. You have to be able to get it very fast, and they have to provide a machine for your use within a reasonable period of time after you demand one.
This is it's wrapped up. Thank you very much.
Thank you.